Okay, why don't we get started? So if you haven't joined us in past, welcome. And as many of you know, ImpactPHL is a nonprofit advocacy organization helping investors large and small to align to their financial assets with their values in the greater Philadelphia area. If you're interested in this type of programming and not currently a member of ImpactPHL, please contact Meg DeBrito and get involved. You'll find her information in the chat box. So our program today is a great lead-in to the two-day Total Impact Summit on May 1st and May 2nd. If you haven't signed up yet, please copy the link in the chat box and register today. So our program today is about building ecosystems. And this is a complex of living organisms, their physical environment, and all their interrelationships in a particular unit space. So the ecosystem is needed to identify socially and environmentally impactful investment and donor opportunities where individual investors, family offices, and institutions are able to move capital. Our panelists today are Audrey Cillian, Corey Donovan, and Looney Libs. And they'll talk about the current impact investment environment and tools that investors need to build a vibrant ecosystem in the greater Philadelphia area and beyond. So we'd like this program to be interactive, and so any questions that you have, put them in the chat box. And to respect everyone's time, we're going to end promptly at 1 o'clock. So let's have some fun, get started. And so Audrey, Corey, and Looney, if you can just give a little bit of your background, and maybe if we start with Audrey, if you could just tell the audience a little bit about yourself.
Thanks so much, Mike, and it's a pleasure to be here with you all. So my name is Audrey Cillian. I've been involved with ARTHA for about 17 plus years now, both working on a direct investment portfolio, specifically in India on behalf of a family office, so very much in the direct transaction role for the first part of the journey, and then really focused on building enabling infrastructure and a platform to support better collaboration. It was really just trying to do this kind of investing and identifying the necessity for collaborators, for co-investors, for bringing different kinds of money to the table in support of the kinds of companies we were seeing, that ARTHA platform was born, and ARTHA Networks is now a software as a service technology and tool, and we are very happy to be involved in a partnership with ImpactPHL to basically hold the frame around the pipeline and the opportunities that sit within the greater Philadelphia area, and to support as much collaboration as possible. So that's my initial intro.
Okay, thank you. And Corey?
Sure. Corey Donovan, I'm the Executive Director of ImpactPHL. I want to thank everyone for making time to be with us this afternoon. My background's in the tech startup ecosystem building and economic development realm. Was at the table in 2016 when we launched ImpactPHL. And so I think, as you probably all know, our main goal is to grow the impact investing, values-aligned investing ecosystem in the Philadelphia region, and to get more people and more capital to be involved and intentional, and seeing local as a lens, and as they see their investments.
Okay, and Looney.
Hi, everybody. My name is Looney Libis. I'm based in Seattle. I used to be in tech too. I spent 20 years building software companies, but that was over a decade ago. For the last decade, I've been building ecosystems such as Fledge, which is a global network of impact accelerators. Realize Impact is the hat I'm wearing today, which is a nonprofit that helps move money into impact investing. And then a few years ago, we launched Africa Eats as a spinoff of Fledge, which is an impact holding company in Africa. And then I write blogs and books and some other things as well.
Okay, thanks. So if we start off just about the ecosystem, then number one, Audrey, can you tell us what is the ecosystem? What is it? And then talk about what the current of it containing impact investing.
Yeah, so I mean, all of us involved in ecosystem building are aware of the kind of the multi-sided nature of this dialogue, of the importance of kind of providing connectivity and opportunities to connect, to meet and reflect and build trust between those who are the providers of capital, be they family offices or foundations or venture philanthropists. Obviously, there's that wide spectrum of engagement from the capital side. And then obviously those who are doing that heavy lifting with the sleeves rolled up, what Looney does with Africa Eats, it's surfacing the entrepreneurs, what Corey's bringing to the fore with all of these innovators in this area. It really comes down to the intermediary kind of connective tissue as well, that comprises, what this is all about. So the ecosystem is hugely fragmented in almost every city and every region, in the sense that folks are used to doing things in their silos. There's not necessarily a lot of systematic information flow per se, but there's so much good intention, I think, across the board in the broad ecosystem for really getting down to the nuts and bolts of, how can we do this better? What's missing? What are the gaps? And so I think that the ecosystem is characterized by a lot of that kind of energy right now. And so we're all, I think, part of the dialogue to capitalize on that energy, to figure out, how do we make this easy? How do we standardize the capture of data and the flow of information, so that the largest amount of capital we can muster up as a collective gets to the entrepreneurs and their teams.
Okay.
Yeah.
No, thanks. And we'll get into exactly, what you're doing to be part of that. But Corey, over the last 5 years at ImpactPHL, what have you learned about building an ecosystem in the greater Philadelphia region?
Well, I think in the work that we're doing specifically, it's heavily dependent on word of mouth and trusted conversations. We're trying to engage and grow the ecosystem beyond the usual suspects, beyond the enlightened few. So I think the idea of how do we grow that really comes down to trusted conversations. We're talking about how people think about their money, how they invest their money, and what their expectations of their money is. And so that's not a billboard on 95 or a Facebook campaign. As we grow the ecosystem, it comes down to ambassadors, which I think is everyone on this call, and a lot of the folks who are part of the ImpactPHL ecosystem is having conversations, at the dinner table, in the boardroom, on the golf course, wherever it might be, to help and open up the dialogue with other folks that might lean into our signal and the work that we're doing. So I think that in order to normalize that, that's an important part of this, and what we've seen as people show up at our front door saying, hey, I talked to so-and-so, and they, we had a conversation about whatever it was, and they told me I really should talk to you. And then we can kind of take the baton from there and continue the dialogue, help to ask some questions, and maybe open up. And what I see regularly is people saying, this has been really interesting. You've given me a lot to chew on, or a lot to think about. I do think it's fairly self-evident to a lot of people. For us, local is a lens we want people to see is, am I investing in my own community? Am I using local as a lens for my investments, or is all my money being funneled to Wall Street, and being invested in things that are misaligned? And I think that local is, the idea of investing in your own community is fairly self-evident for folks once we have that conversation. The question then becomes, how do I do that? And that's where ImpactPHL and our Opt Impact platform can play a role in making those connections. But I'll pause for there, and we can come back to that later.
Okay, no, thank you. And Looney, you have some deep thoughts. I had read a piece that you had written about what you're thinking about at night and like just solving the world problems as you sleep. So if you
or not sleep. Yeah.
yeah, that's incredible. Like I just sleep and you're working on stuff. But if you were given a blank page and how would you build a kinder, more efficient, socially, environmentally impactful ecosystem?
Oh God. Okay. You just give me carte blanche.
And we're limited to the next 50 minutes.
No. I'll keep it short. But the biggest issue we face is actually the opposite of Corey's problem. Investing. So ultimately, the ecosystems we're talking about are change, and therefore startups and novel ideas and new organizations. And historically, those were all local. So if we just go back and look at the tech sector and the rise of startups, those were they might be national companies, but they start somewhere in one city, and they're typically funded by investors in that one city and supported by others in that one city, whether that city is San Francisco or New York or Philadelphia or Seattle or Austin, Texas, or London or Nairobi. And that's all broken now. So the good news is that it's no longer local because the impacts are global, because climate change isn't a local problem and hunger is not a local problem. And equality of all sorts are not local problems. They're national and global problems. And so the companies that are solving these problems, or the organizations, because some are nonprofits that are solving these problems, are often now distributed. They're based, not in one place. My team for Africa Eats is in 3 cities and 2 continents. And the investors that are providing the capital are not in one city. They're spread around the world as well. And so the biggest challenge we have is connecting those 2 pieces together, but it's really connecting 18 pieces together, because there's other supporters and other stakeholders that need to be connected as well. And that's just really hard when we're all in different cities.
Okay, thanks. Audrey, you created the Ortho platform over 15 years ago. Can you please tell us why it was created and what its significance is to socially conscious investors?
Sure. So this was like a project born out of the experience of trying to source pipeline, trying to due diligence pipeline that wasn't in our backyard, and to co-invest systematically, because we realized very quickly that the only way to manage risk was to hold hands with others. And so the tool was really just initially focused on trying to find a way to encapsulate a workflow so that it's more efficient, so that we don't incur these massively high transaction costs as a collective, as a community of investors. All of us were kind of, you show up at a couple of industry events, it doesn't take any special skill per se. You show up often enough, you get to know the players, you realize, oh, we're all kind of looking at kind of the same entrepreneurial kind of spectrum, and we are all kind of diving deep, into a specific niche here or there, depending on our interests. I just started to do the math and realized, oh my God, I'm the 6th investor to go do due diligence in some place, which is hard to get to. And if you start to do the math, it starts to add up, and you end up realizing, these investors are probably spending more on their own processes than on the actual company in total, in some cases. So it was really just born out of that initial problem of, oh my God, we're all doing the same stuff. We're not talking to each other. And it's in the name of impact. And do we have to act like VCs when we do this? Do we have to, no offense to the venture capital community or the private equity investors, but we have the luxury of behaving differently and using a different kind of archetype as a point of reference. So it was just this idea of finding a way to deal with the information asymmetries in process, so that you don't stumble across somebody who you actually know, who's done a deal that you could have totally gone in with together just because you're a little late to the game, or they did it last month, or it closed whenever. So that was the initial idea, Mike. Mike, you're muted.
Thank you. So Artha is a platform. So, and you're doing work globally. You've been initially focused in Europe. So why did you develop these software as a service technology?
So really quick, initially we just built it as like for ourselves and in the peer community associated with the Indian impact investing strategy of a family office. But it was licensed by the Inter-American Development Bank in 2013 because they saw, oh, maybe we can use something like this to bridge the gap with private financiers and families and private foundations in our region. And then we realized we could actually turn it into something that could be usable for others so that they wouldn't have to build bespoke stuff all the time, which is kind of what happens a lot in our world. And we did a study with a bunch of others that will be familiar names in the US that basically looked at the landscape of the platforms out there and realized, oh my God, there are like, at least at that time, now we count almost 300 that we know of, but there was like 200 of them, all of them bespoke, none of them connecting to each other, which doesn't do any favors to the entrepreneurs in the end, because there's no real liquidity in small pockets of, tech that only caters to usually 90% of the time less than 1,000 users.
Yeah. So what's really interesting to me is that, okay, you look at that global platform and then you look at Philadelphia. And so, Corey, what role does OptImpact play in building out this ecosystem, that you discussed earlier?
Well, as we engage people that might be new to the idea of investing locally with intentionality, again, I think there's very positive reception to that. The first question becomes, and this really started hitting in our work, 3.5 years ago, is that sounds really interesting. What's possible? What's out there? Ironically, I think it's easier to invest in companies halfway around the world than it is in your own backyard. There's many reasons for that that make that possible. Products, systems, the way our financial system works, et cetera, laws, rules, but also platforms and processes and systems. So once an investor makes local a lens for their investments, they want to know what those opportunities look like. And so what's on the menu? There's no centralized exchange or market for those investments. So it can be very difficult. They come in different forms and debt, equity, startups, real estate, funds, et cetera. So if people are looking for impact, and local, we have to give them some kind of menu. And so like the old saying says, you can't be what you can't see. So I think the very next challenge, if you will, is making investable opportunities visible. And that's where ImpactPHL and OptImpact can play a role in helping to connect those opportunities with the capital that seeks the outcomes.
And Corey, what do you think that's missing in building a more efficient, socially and environmentally impactful ecosystem?
Yeah, well, again, stating the obvious, I think it's capital and investors. And I think there's a lot of people out there who seek those outcomes. They're tired of putting band-aids on things. They are frustrated by the lack of progress. And I think they are legitimately interested in the opportunities that I'm aware of, that we're aware of as ImpactPHL. Again, some of that visibility is a challenge. So that's the first thing that, I just have to say. I think the products and services, I kind of alluded to this in my last question. I can go online right now and in 20 minutes, I can invest in Apple, Tesla, Vanguard, BlackRock. But if I want to invest in the opportunities that are here in Philadelphia that align with my values, to be quite frank, it's not as easy, and yet it's critical. So in the long run, I think more products and services to help facilitate, capital moving and making it easier, it would be great. I actually talked to some Wharton MBAs recently and encouraged them to tackle that.
Do you think that Philadelphia has, you mentioned two things that are needed, investors and capital. Do you think, I guess investors, capital, or if we couple those together, but projects, the investments, impactful investment opportunities. Does Philadelphia have those?
Yeah, well, I think we're very fortunate that we've got dozens of opportunities. And when I show that menu to an investment committee of a foundation or a high net worth individual, they're usually surprised in a positive way that there are so many opportunities available. Part of it is because here in Philadelphia, we've got a lot of big problems that we need to tackle. And this idea of the two pocket system where we're going to create the problems at a faster rate and a larger scale with our investments and then try to fix them with 2, 3, 4, 5%, of our give back philanthropy, is sort of ludicrous. So the idea of investing to fix the problems in the long run, to create a more inclusive, sustainable, and resilient economy. We actually have a lot of people, entrepreneurs and developers, real estate and fund managers that are looking for that capital. So, like I said, to answer your question, when we can show those, not to mention also, CDFIs, I don't want to forget about them as well. But when I can lay out that menu that shows dozens of opportunities, legitimately and literally people lean in and say, we've never seen anything like this. And I think, again, OptImpact becomes a platform that not only can we show them what's possible, but then they can learn more about it. They can connect with co-investors, et cetera.
So to shift gears a little bit, Looney, why did you build Realize Impact?
Accidentally, actually. It accidentally got built in 2013. We were looking for a solution on how you create small pools of capital for small investments, how you pool together, $10,000 checks to go and make $100,000, $200,000 investments. And none of the lawyers back in 2013 knew the techniques that are now used by AngelList. And so they all told me it was impossible, except one. One said, oh, your solution you're looking for is a nonprofit. So we spun up a nonprofit. We tried out her solution and it didn't work. So we had a nonprofit that was a 501c3 public charity. And then we discovered a related problem. 2019, we had some, I call them investors, but technically they're donors because it was a donor advised fund. We had some donors at a donor advised at our local community foundation here in Seattle, Seattle Foundation. They wanted to make some investments. Seattle Foundation didn't want to do any more investments. They were already on the bleeding edge. They had made 15 investments in 10 years. That was considered a lot by a community foundation. They didn't want to make any more. So we had many, many conversations with them on why and how and whatnot. And so at the beginning of 2020, before the pandemic, Realize Impact launched a service that lets anyone with the DAF anywhere in the country make an impact investment. And so that's the actual solution we're pushing on now. It's been incredibly popular. We've made over 130 investments from 400 different donors. And we exist because it just wasn't being done at scale. Talk about ecosystem piece that was missing, and it needs to get done. We need to solve Corey's problem of how do you make it really easy for someone to make an investment in anything, anywhere that's impactful.
And that's been successful then for the company and for the donors.
Yeah, so we're moving over $1 million a month.
Oh,
so
good.
At a pretty good run rate.
And what you always think of the Vanguard, charitable financial. You think of the National Philanthropic Trust. You think of Fidelity. Are you working with organizations like that, or are you working with community organizations?
All of the above. So literally, when I checked the bank before this, $200,500 appeared from Fidelity today. We've worked with Vanguard and Schwab. We've worked with dozens and dozens of community foundations. I discovered, didn't know this, Morgan Stanley Giving Trust is a DAF. Bank of America Giving Trust is a DAF. Every bank has a DAF. And then there are the national ones like Impact Assets and Tides and Jewish Community Foundations. And there's about 2,000 DAFs in the world, donor advised funds. And I have no idea how many small family foundations there are outside of DAFs, but many. And many of those don't know how to make an investment or don't want to deal with the intricacies of making a private investment. So they work with us as well.
And going back to one of Audrey's points with Artha about the importance of due diligence, who is doing the due diligence at Reliance or Reliance Impact?
Well, we of course do our own. We're not trying to overlap and redo what a donor's done. So I'd say about half the time the donor comes to us and they say, here's what I found, I like it. Please double check it, but then make this investment. Anything between 10,000 and $1 million. We'll then continue on from their due diligence, check the rest of the terms. We'll be the one that looks over the investment paperwork, make sure it's prudent is the regulatory level, make sure everything looks okay, and then we'll deal with the details of making the investment.
Mm-hmm. And Audrey, how is that working with Artha? Just with the due diligence side. When I think you were saying that there's duplication. In that particular space, you're finding a bunch of people doing due diligence. How does Artha help with that?
Well, it's there's a couple of different models, and different conveners will have kind of varying litmus tests on, well, we do the diligence, we want to vet everything that you see. It kind of depends on the model that's employed, but in general, the tool is it's simple insofar as it allows for uploading individualized template. Everyone has a different way of doing that.
Well, maybe if we go back to the opt impact, so the specific model that ImpactPHL, the Greater Philadelphia area, has the opportunity to use. If you could talk specifically about that.
Right. So, I mean, it's coming back to creating a customizable way of uploading individualized due diligence methods. Every investor or a master administrator on Opt Impact has uploaded, well, what does due diligence look like? What should be the 50 questions that you might want to consider when you're looking at something in X or Y area? And it allows for collaborative workflows so that you can invite others to the due diligence room that is created, that instance that's created as soon as you start a process. And then you can, everyone can answer their questions, assign questions, upload documents as necessary, and then close it out as a group to be either, shared with others if that's their prerogative or not. We don't want to be prescriptive about what gets shared, obviously, as investment processes go, but it's a way of capturing that information in a way such that it's not lost and kind of hidden away once it's done, because it takes so much effort and it's a commitment. I mean, when you decide to do diligence, you're already seriously interested. And so that's what we're trying to facilitate.
So you could do that as an individual, you could do that, or as an organization, but a lot of people have an advisor. They have an investment advisor, investment consultant, that's involved. Are you seeing that the consultants are embracing the platforms or like an Opt Impact would be, or do you see that them saying we don't do that? You need to do your own due diligence.
Well, it's a highly idiosyncratic process, I think. So it's just as easy to hand the rein, create a due diligence process and then hand the reins over to your advisor to do this for you, but in a place and in a format where it's very visible, where you can track progress, where you can also assign tasks. Because half of the due diligence that you do is also comprised of asking the entrepreneurial team, tell us about your org chart, tell us about your management team, tell us about your history, how much debt all of these types of questions. It's about gleaning information from the company. So all of this can be done in a space where it doesn't have to be you yourself and your family office or your vehicle. You can just as easily have your advisor do this, and they can determine who else they need from the ecosystem, notably by way of service providers, legal counsel, accountants, auditor. I mean, there's all kinds of input that can enrich and inform a successful due diligence process.
Yeah, I think that's super interesting because I think the advisors want to help the clients. They don't know how to find, number one, they don't know how to find the deals. They don't know how to find the investment opportunities. And once they're found, it's how do you do the due diligence, with this? And so if it could be done in a more communal, setting where everyone's sharing, that's great. So Corey, when you look at, these socially impactful opportunities we're talking about, that you had mentioned, there's a few dozen in the greater Philadelphia area. Why hasn't money moved to them in a very big way right now?
Well, there's probably lots of reasons for that. I think one of them is that most people outsource their financial management. So they don't really understand and haven't thought about the links between their investments and the issues they care about. At least from where I sit and talking to folks, that's pretty apparent. So I think ideally financial advisors would be talking to their clients about their values and understanding that. And then helping them to align. So they would be leading the conversation. I think that's the front door to this conversation, but often we're at the back door, engaging the people who own or control or influence the capital and having those conversations with them and encouraging them to initiate the conversation with their financial advisor. I think another reason, if we're being honest, that we're talking about here is it's not as easy to invest with intentionality and with local intentionality. People have to figure out new systems, new frameworks, new processes. They have to go find things rather than having the investable opportunities presented to them. So creating the processes and tools that make it easier is critical to enabling capital flow. And I think if you're listening, that's what Looney and that's what Audrey and that's what ImpactPHL is all doing, is trying to engage and educate to a certain degree, and then create the products and systems and processes that eliminate the barriers and the hurdles.
And who do you think is driving the process right now?
Driving the process for how capital flows?
Yeah. So you said, okay, the problem is that investors are using advisors. So the advisors aren't aware of the opportunities, or they don't know what to do once they find them. So who is driving it, or who needs to be driving the process?
Sorry to jump in. Wealth advisors don't do private investments in
Okay.
general. They push back. You as a high net worth individual can ask them to, but 99 out of 100 or 999 out of 100 will refuse and say no.
What do you mean they push back, Looney?
So impact or not, if you as a high net worth individual go to your UBS advisor, your Wells Fargo advisor, your whatever advisor, and say, I would like to allocate 10% of my portfolio in private equities, A, they'll talk you out of it just to start with. And B, even if you insist, they'll say, well, then just bring us the deals. We'll take a look at them, but we're not going to diligence for them. We'll just do the paperwork for you. They'll just refuse to engage with private equities and private debt. They'll claim, right? The reasoning why is they'll claim that FINCA doesn't allow them to do it, that it's against the FINCA rules, which is not true. And the reality is that they refuse to do it because if these go wrong, then the client can turn around and get mad at them and say, hey, you lost me money. They could say the same thing for every public equities investment that they put their money in, but they don't hide behind FINCA on those.
But I know you're not an advisor, you're not giving, obviously, the financial advice, but if you look at this and you said out of the total portfolio an investor has, what portion are we talking about? Like if you were to pick a percentage?
A typical wealth management portfolio would do 5% in alternatives.
Yeah.
And this is alternatives. So is gold, by the way. Gold falls into alternatives. And someone in the chat window said that they'll do it as an independent advisor. And I said it's not 100%, but it is like 999 out of 1,000.
Yeah. Yep, and I do think that there are advisors that do want to jump in, do want to help, with this. Obviously, it's a disincentive for them if the model is that we get paid on what's in on our platform. So if you're taking away 5%, it's 5% less than they get paid for, unless they cut a different deal or are able to include that as well as assets under management. But I think that's interesting. That's what you picked up on as well, is that people or advisors are not supporting the investor that wants to go forward in a lot of cases. So what do you think needs to be done to move more capital then, Looney?
Again, I'm go back to what Audrey does. We need systems outside those wealth management advisors that are easy to use, that are friendly to the high net worth individuals, so that when they decide that this is what they want to do, they can go do it themselves. And
Okay.
they will literally just take the money out of the wealth advisory pool, or use money they didn't put in that pool.
So you think it's going to be the investor or the asset owner that's going to lead the charge, do this themselves? They're not necessarily going to be able to persuade their advisor to do so?
Again, there are exceptions out there, but I don't know any advisors that are like hungry to go and suggest things to invest in that are not on their platform and not in the public markets.
Okay. Yeah, Audrey, I thought it was interesting in looking through what you're doing with Philadelphia through ImpactPHL and elsewhere. Why you said it's the interaction of 4 key user profile types. It's the investors, the entrepreneurs, the enterprise support organizations, and third-party services providers are really important. Can you talk a little bit about that?
Sure. I think, it comes down to what I think we all implicitly are touching on and understand is money and projects do not the ecosystem make. You need the folks who are actually able to have visibility on and jump in on things like technical support, capacity support, legal support. So important. When you don't have the right legal counsel, you can lose. You can not only fall afoul of regulation, but lose years of time and effort. So the role of the service providers on the ground, and they're always there. Everywhere. You can go to the outer reaches of, rural districts in Assam in the northeast of India, and you can find your local lawyers, your local accountants, your local auditors. They're everywhere. They're not easy to find. And it shouldn't just be a function, can't just be a function of who I happen to know. Our social capital is not always as rich and fleshed out as it should be. So it's just this idea of using a basic networking infrastructure to be able to ensure that, like, when we all have success with working with a couple of lawyers in a particular part of Philadelphia, for example, that's great. We should be able to share that information. And it's not just as well about, again, the money and the project itself. It's so important to have that intermediary fabric, and what Corey does, getting people together, building trust, giving a view of the landscape. That's what I think is going to incite and inspire an individual wealth holder to be like, I want to step in, I want to try this, I'm going to dip a toe in. They're never going to be advised by their big financial institutions to do this. It's going to be on the back of a spark and a moment of light when you're listening to an amazing speaker at the ImpactPHL conference, for example. So I think it's all about thinking about the 360 degrees and all of us.
No, and I think that's so well put, because I truly believe that, like, it's people like Corey that's so passionate, about this topic that will drive people to say, what am I missing, with that? And so when you look at that, and Looney, if I go back to you, you've written something that I thought was interesting. That so Corey gets them all fired up, and say there's opportunities out there that you can be really impactful in the greater Philadelphia area and the communities that surround that. And you look at the angel investment structure, or the structure that exists around exit strategies, and you're saying that's all wrong. Can you comment on that?
Yeah, I've talked about that a lot. Basically, the thing I rant about is the venture capital model. And so in short, this is a model that got invented in the early 60s. It did get invented in Silicon Valley. That's where it's most known for, but that's where it started. And the model is find a company that's up and running, up and coming, right? That you think is going to make it big. Hand them relatively large amount of money to go and become big. And then the only way out, the only way investors are supposed to get their money is that company then gets acquired by someone bigger. And we've seen it work. Google, Facebook, Apple, Intel and whatnot. A few of them have gone public instead of being acquired. But the vast majority of those that succeed and called success are acquired. And that hasn't worked in impact. A, it hasn't worked in most cities in the United States, let alone the rest of the world. And B, it hasn't really worked in impact because there aren't acquirers out there trying to, build up much bigger impact companies. And because it doesn't exist, because there aren't this massive number of acquisitions, hundreds or thousands per year, that just means that the whole investment model doesn't work. So if I hand over money to a company that I think is going to be big and great, but there's no way for me to get my money back out, then as an investor, why did I give them the money? I've basically just given them a grant then. Like, I can count it on my balance sheet as value, but if it's been 15 or 20 years and it's still just sitting on my balance sheet as a number, I've given a grant. I haven't actually
made but there's been successful investments into companies as well.
Yeah, but on the order of maybe a dozen or 2 dozen, and most of those in organic food. So we take away the Stonyfield Farm and Honest Tea and Ben and Jerry's and Whole Foods. What's left? Don't name me 10 impact companies that have exited.
So are you saying that what we should be doing is working on the grant and the
No, not at all. There's one possible way, which is, okay, let's just do grants, but there's not enough money in grants.
Right. So if you loan money to companies, is that a better way than?
No, that doesn't work either, because you can't get enough back given the risk you're taking. And so I'm working on for the last decade, I launched revenue-based investing or self-liquidating investments. That works pretty well. And then my work in Africa is actually building, someone said a PE holding company. Yeah, I'm basically building a VC holding company in Africa with the expectation that the holding company itself goes public, but none of the investments we make ever liquidate. So Berkshire Hathaway style. And I think that's working, and you'll see, I just started announcing this, you will see us launch a second one of these holding companies in a second sector by the end of the year.
Yeah, from an investment standpoint, I do think that there's opportunity on the equity, like equity fixed income, the side of things as well. I don't know if you have any thoughts, Corey or Audrey, on that.
Well, I'm sorry, what was the question exactly?
The question is that when you spot an opportunity that's there, the platform, that, so if we look at the OptImpact platform, we look at what ImpactPHL has put together is an array of, you can invest in things from an equity standpoint, so that you could have invest that way. You could loan money to a company, or you can, if you wanted to just give it away, grant it, or do something as concessionary capital. That's there. And Looney, I think is saying that the angel investor model is broken right now because it's all based on exit strategies of when you get out, and it might be more efficient that to look at things from a granting standpoint than to invest.
No, don't put grant in my mouth.
Okay, go ahead.
And
Say it better.
alternative structures and anything that's an alternative to preferred equity and exits.
Okay,
Well, yeah, I'll agree with Looney in that, it's not an all or nothing sort of, single, especially with background in tech where everything has to be a unicorn. Otherwise, you might as well just fail quickly and it's not worth doing. There's plenty of people out there who want to solve real problems or work for themselves or what have you. And the idea that they're going to have a 20x exit in 5 years, or, it's not worth doing, and that 9 out of 10 things will fail for that one home run or grand slam. I agree with all that. But I think at the end of the day, from the way I see it, is as we engage new investors to add intentionality beyond their investments, beyond just what does it return, and as we add local as a lens, I think you don't want to sort of try to get them throw too many things at them at one time, around their investments and how many things they need to be sort of rethinking. So I think at the end of the day, the way I think about it is, as we engage a foundation or a high net worth person or family offices, tell me what issues in the world matter to you, and then we can help to identify opportunities that might align with your investment strategy. What kinds of things you invest in, whether it's tech startups or it's debt, and align with your values so that you can start to move in the direction, right? Like I think it's a progression and it's a journey for everyone. And people aren't going to, to sort of use a metaphor, the people that are already impact investors are the Olympic athletes. They're doing it, they're measuring, they're reporting, they're being intentional. We still have people on the couch, right? So we don't want to, say, get off the couch and go be an Olympic athlete. You want to say, get off the couch and start walking, start, taking a daily jog, start, et cetera, and start moving them down the path. I think there's a ton of potential at that intersection to getting more people on the path and getting more people to be thoughtful. And part of it is connecting with the ImpactPHL community writ large here in the Philadelphia region, where you can connect with people that are doing similar things, where you can learn from them, et cetera, and be inspired. Quite frankly, my name was mentioned a couple of times about what I'm doing, but it's really ImpactPHL itself, and not just the organization and the staff and the board, but the community. So as we engage additional people, I think that's all very important to get them moving down a path. And then as they have small wins, they can gain confidence in what they're doing and take that next step as well.
And I think if everyone's, and we've spoken about this before, if everyone's kind of working in silos, and they don't see the opportunities, they don't see other investors, people are afraid to be first in, with things. And when we're talking about combining private and public dollars, so if you do have foundations that are out there that said, we could put some dollars in, we're granting money to some organizations anyway. If this is an organization that can be impactful, a for-profit organization impactful, sure, we could allocate dollars there, and either in a concessionary way or almost as a grant, that we can do, which could encourage, or they should encourage, other investors to then put dollars in, because they've de-risked, the portfolio or investment. So Corey, Audrey, do you have any other thoughts on that?
I'll just, I'm in vehement agreement with what's being said. And the sooner we're disabused of the validity of this mindset that it's about winner takes all, zero sum unicorn, unicorn land, the sooner we figure out that that is incompatible with societal and like societal collective, society-wide collective impact, the better. Because it doesn't, the structures that do end up kind of being successes for these types of VC investors are never the ones that are necessary, that are trickling anything down or sharing and distributing profit and dealing with negative externalities. And so, yeah, I mean, all of this resonates 100% with me.
Yeah, so the last question about investment opportunities, Corey, if you could talk a little bit about why it's difficult to find these opportunities and how you think that OptImpact will help with that.
Well, the way we've been doing it, the criticism I had earlier of how capital currently flows is because it's all integrated and it's scalable, and it's they work hand in hand. Whereas local impact driven investments are the opposite. They're not huge. They're on a local level. They're harder to find. So it's like from where we sit and what we're doing, and I think part of the value we've been adding to the ecosystem is a mix of economic gardening and metal detecting, finding the opportunities, whether it's real estate or it's a, social enterprise or it's a fund, in all its various forms, and curating them in a way to identify what exactly is the impact, so that we can draw that out and then making them visible. And so I think that's something we've been doing for the past 4 years, really focused on. We get positive feedback on that, as I mentioned earlier, and OptImpact becomes the next step there to say, okay, now we know that they exist. And it's not easy, by the way. I have a weekly call with board members of ImpactPHL so that we're out there saying, and now that we've built this ecosystem, we have call it crowdsourcing, right? It's coming in from partners in our ecosystem, a family office, a foundation, who's saying, hey, we've identified this opportunity. We did the due diligence. We think the impact is credible. We think the investment is credible. And now we can share that out with the broader network to find those co-investors, et cetera, right? So we've been doing that, call it manually. OptImpact becomes the next step to help to facilitate that. And I don't want to say automate that, but to a certain degree, help to automate that.
Yeah, no, thank you. I want to thank everyone for their questions too. Is that there's been a number of questions that's come through the chat box, and hopefully we've been able to incorporate many of those into the conversation today. I want to thank our speakers too for their thoughts and insights on this subject. And again, if you want to learn more about this and the sustainable investing space in the greater Philadelphia area, please contact, Meg or John Moore or Corey, and really get involved. And I also want to encourage everyone to attend our Total Impact Summit. Again, that's on May 1st and May 2nd. The group of speakers that have been put together are just incredible. So please take a look at that. Please register and please get involved. So I want to thank everyone and have a great day.
Thanks for being here.
Thank you all. Lovely to be with you.